Hello, everybody. Joined with Brenna here to talk about our Denver metro real estate market. So, what's going on in our market? What are we seeing? How are things being impacted by the increase in interest rates? We are going to be looking back at February's numbers. So, can't believe we're already into March 2022. This year's already going pretty wild and crazy. So, Brenna, go ahead and introduce yourself and tell us a little bit about you and Land Title.
Yeah, thank you for having me. I think if you've tuned in before, hopefully you know me, but Brenna Harper with Land Title. So we pull these stats every month, thanks to our amazing marketing and stats team, and then we get to talk about them and analyze them. So we really just do this to add value to our agents, lenders, but also to the consumers, the buyers and sellers, so they can understand what's happening in the market. It can be pretty overwhelming to buy or sell a house regardless, but especially right now with the market conditions, it can just be scary, or even just kind of, if you have snippets of the information, may even push you away from a decision, a buying or selling decision, when maybe there's more opportunity than you think. So just trying to shed some light on what's going on, find some positives, find some strategy, and at least kind of get you familiar with the process so you can feel really confident as you enter the Denver real estate market.
Yeah, very much, right? The information's useful. What we do with it matters, right? It's, I kind of liken it to baseball. Depending on, what the situation is, changes the strategy for the manager of the baseball team, right? If there's 2 outs in the second inning with, no runners in scoring position, that's a little different than, 1 out in the ninth with a runner on third, right? So.
Yeah.
What are we seeing here with our real estate market for February? Interest rates are going up. Does that mean, hey, we've hit the peak and we're about ready to go down this roller coaster?
You froze on me. Am I frozen on your side?
No, you're good.
Oh, there you are. Okay. So you were talking about interest rates being at the peak, or maybe at the peak.
Oh, I think we may have lost Brenna. See if we can get Brenna back.
I'm back. Can you hear me?
There you are.
Sorry.
Hey, good. We lost you for a minute. So yeah, I was talking about, what happened for February, right?
Yeah. So, interestingly enough, at the beginning of the year, we all were told the interest rates were going to be pushed up potentially 4 times throughout the year. We had one increase at the beginning of the year. People smarter than me were saying the next one was going to happen in June. But actually, with what's happening abroad in Russia and Ukraine, we actually have seen a little bit of a downtick in those interest rates, which is potentially good for our market as far as affordability, because, and we'll jump into this in a second, but just with the inventory being low, which has been the story for several years now, every dollar counts as far as our buying power goes. And that was the big conversation with, as interest rates increase, how does that change our buying power? What does that look like? So obviously none of us expected, or I didn't expect what's happening overseas to happen currently. So things could change just as quickly again, but we are seeing a little bit of a reprieve in those interest rates. Not that historically they're still incredibly low, but from where we were kind of this time last year, they had gone up. So with that, I'll jump in to kind of what we're seeing here. Can you see my screen, Matt?
Yeah, we've got you up now.
Okay, perfect. So the first to know is always the one I like to go over. It just has a few different metrics, and then we'll dive into the Greater Metro Denver report. So this first one can be a little bit intimidating, but our single family average sold price for February at $679, up 9% year over year. And our condo townhome, or that attached market, at $449, up 14%. It just shows kind of the market that we're in. It's pretty volatile. Our appreciation is just through the roof. But I show these with a caveat saying that there are opportunities below these numbers. This is an average. There's different counties. There's different areas. I think sometimes we just look at these numbers and it just freaks us out. Like, oh my gosh, that's so high. I can't play there, so I'm just not even going to look. So yes, this is an average for Greater Metro Denver. But there are different opportunities, so kind of take it with a grain of salt. I think the thing to really take away from it is the year over year, and we'll even look at month over month appreciation and how quickly things are moving upward in that area.
Yeah, to your point, there's always opportunities in those markets, and looking at some clients that we represented, we just listed their house last weekend. Detached house, very nice, not a whole lot anybody would need to do. It's not very big. It's a 2-bedroom house at $475. So we look at a detached house, nice, move-in ready, and you can be there, listed at $475. There's always opportunities that are below that average.
Absolutely. And I apologize. That was January. I thought that looked a little bit wrong. Let me pull up February.
The numbers are higher.
They are higher. Yes, they are. But where'd it go? First to know. Okay, well, I'll just skip that part. We can talk about it through Greater Metro Denver. So let me share again and I'll get this going. But something that I wanted to show on that screen was the difference between active inventory and inventory coming onto the market, or like the new inventory. So the difference there, active inventory is a snapshot on one day. So on the day that we pull the data, which for our first to know is on the first of the month, there was 1,100 homes on the market in all of Greater Metro Denver, which is tiny, nothing, very, 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 very low numbers. But something to keep in mind is that we had just over 4,000 homes, new listings come onto the market in the month of February. So that is an increase month over month. That is very, very close to what we've seen historically for February. New listings, as I've talked about before, has actually been the most stable metric as far as compared to prior to COVID. So, Matt likes to joke that you could set your watch by the real estate market prior to 2020 because things were so consistent. And it didn't mean that they weren't appreciating and moving, but we just knew when the buying season was, when the selling season was, when things were going to kind of go through those flows. Things have changed in the past couple of years. But the new listings have really stayed kind of on par what we've seen historically. In January, they were down, which did not help our active inventory. So it was really nice to see those new listings rebound back to where we're kind of used to seeing them. So there were 4,000 homes that came on the market in February. There's only 1,000 left. Obviously, we're absorbing them quicker. So our bench or our resources, our reserve is not growing. But when people say there's nothing on the market, no one's selling their home, that's not quite accurate. It's just that the demand is exceeding the supply. But having that new listings bump up month over month back to where we're used to seeing it is a good sign. It means that there's more opportunity, and we're hoping that that continues to go with the flow that we're used to seeing, which would mean that we're coming into those spring selling months where people want to sell their home. So more inventory is coming on the market.
Yeah, we've talked about the percentages kind of get skewed when the number is very small. Now, I've been anticipating that we're going to see an increase in active homes come this month, come March, because that's what we saw last year, and we've seen over even the last couple of years. But even if we went from 1,000 homes to 2,000 homes, that's not a lot of homes on the market. But if you just hit the headline for percentages, they're going to say it was a 100% increase in active homes on the market. And it's like,
Yeah.
well, yes, and we still have X number more buyers in the market, gobbling homes up quickly.
Well, and to your point, if we look at this first bullet point, that February saw even lower inventory, increased demand and high prices. That's 1,100 homes, active listings in the 7 Metro Denver counties, 20% decrease over last month. Well, yes, it's a double-digit percentage, but to Matt's point, we're starting so low that was less than 200 homes. I don't know the exact number off the top of my head, but it was just a few homes different. Obviously, we don't want it going in that direction. We want it to be an increase in some capacity month over month. But that 20% does get a little bit skewed because we're working with such a small reserve of inventory.
Yeah, let's find that balance.
Absolutely. And silver lining, new listings are coming on the market. So that's a good sign as we move into this spring selling season. Months supply of inventory. So if the current buyers that were on the market or in the market, we're looking at the current homes that are on the market, how long would it take for us to run out of supply? 0.23 months. So just a couple of days, which this is pretty much a day here, up a day there. We've been in this situation. We've talked about month supply of inventory as far as a balanced market. For Denver, Colorado, we'd probably be sitting around that like 3 or 4 month mark. So we are obviously way below that. National Association of Realtors says historically, across the board, it's about 6 months. But 4 months or 6 months, less than 2 weeks is clearly below that. So it's an extreme seller's market. We need more homes on the market to put a dent in our buyer demand is really the bottom line there.
Yeah, I think we'll see the impact that interest rates may have, because I think it's going to slow down the number of buyers in the market, in particular those buying second homes.
Yep.
So we'll see as this shifts, exactly what's going to happen. Yet a couple things are not going to change. Colorado is still a fantastic place to live. It's still a very diverse economy as we look at where the income's coming from. So that helps keep us pretty stable, and we don't have a lot of homes comparatively. So
this is something I pulled up. I thought it would be interesting to share as well. So this is people moving in versus people moving out of different states across the country. So we always jokingly complain, maybe not so jokingly, about everyone coming into Colorado. So the green at the top is where people are moving to. The blue at the bottom is where people are moving away from. So we're in the top 10 for both. We are the 5th highest state for people moving in, but we're also the 7th highest state for people moving out. So that's kind of interesting, especially within the last year. We've seen more people leaving Colorado. Some of it's affordability, some of it's just climate. What's happening in Colorado. People want more space, whatever different reasons. So yes, we are still a place that people are moving to. Sometimes it feels like in droves, but we're not Florida yet, thankfully. So Florida being number 1 for people moving to, and California being number 1 for people moving away from. So I think we're definitely getting some of those Californians coming. We've talked about that, but just a little bit of an interesting graphic to show not everyone's staying in Colorado, even though we have a lot of people coming in.
Yeah, very, very interesting, right? My mom's on that list of moving out, and she's been in Colorado or was in Colorado for, over 30 years and just recently moved away. So adding to that mix. So there's a lot of folks that are, yep, it's not the same Colorado. There's a lot more people than I'm comfortable with, and they're shifting. So we're seeing that as well. A lot of folks kind of moving that direction, cashing out their real estate here where the values are as high as they are, and saying, hey, I can go live in Texas or Florida or South Dakota, or take your pick, and have a little bit different affordability.
Yep. So I want to go back to this one because I misspoke last time I had January pulled up. So the average sold price for detached single family home in February, $735. So an 8.5% increase month over month. So that can be a little intimidating for sure. And I'll show you another graph that breaks down some different opportunity. But what I will say is, if you're a seller, one of the number one questions that we get is, yeah, I can sell my home, but then where am I going to go? Well, we're seeing such incredible appreciation that in most cases, you have a substantial amount of equity in your home. So utilize that and utilize this springtime in the season to really max out what you can get for your home, so you have more money to play with on the flip side when you do become the buyer in the competitive market. So utilize what you're getting on one side to be able to make the move on the other side. So that's kind of my take on it as far as how to make a silver lining in a really difficult market.
Yeah, that balance, right? The market that you sell in is always the market that you buy in. So, and as you look at that, it still kind of stays relatively even keel. Unfortunately, I think there's some clients that when they're on one side of it, they're like, okay, well, I got to maximize and get all this when I'm selling. But when I buy, I don't want to buy under the same conditions. And it just doesn't really work that way.
Nope, not for most of us, unless they're renting in between or going to a completely different market. So you just have to understand the strategies for both sides, and try to maximize what you can do on either side of that. But
gosh, even renting in between, right? For a bigger detached home. I heard today. Now I don't have real evidence of this. I heard from an industry partner that they were hearing of $3,000 to $4,000 a month rents for a detached single family home in some of the areas just kind of west of the Denver metro area.
Yeah, landlords know that we have a housing shortage. Costs of living is going up, so their expenses go up. So that just trickles down to everything. So, sometimes renting might be the right option for your situation, but it's definitely getting more expensive in a lot of places. So this is our market snapshot that we talk about every month. This is detached single family and attached single family together. So green is active, blue is pending or under contract, and then red is sold. So this is a really good one for just kind of that bird's eye view of what we're seeing, what the correlation between the different metrics are. We're seeing, that blue line is pending, that's going up. That means that more homes are going under contract from December, January, February, and we anticipate that will continue to go up. This graph doesn't show 2019, which we're kind of considering our last normal year. But even if we just look back to 2021, you can see that blue line, it kind of just goes down a hill. So spring selling season pendings come up, and then they come down as we get into Q4, as their days get shorter, as it gets colder, different things like that. And then solds being that lagging indicator, so they follow what happens with pendings. That's continuing to go up as well. So people are still buying homes. There's just less to choose from. So we just need this green line to take a turn and go the other direction, and we'd be in a much better spot as far as actives go. But we've been dealing with low inventory in some capacity for several years now. It's just getting even tighter than it has been so far this year.
Yeah. Going to stay tight. I think we're going to see, again, that double-digit percentage appreciation. I think I said this if it wasn't last month, the month before. I think we're in for 15 to 20% appreciation in the Denver metro market this year.
So last time I wasn't sure I agreed with you on that, and I might agree with you a little bit more this time around. So we'll see. But even in the last 2 months, we've had some significant appreciation. It's basic supply and demand, and with supply so low, homes are just going for more competitive prices. So, not to beat a dead horse, this is our active listings. We were at 1,100 homes combined. If we look at kind of that balanced market, what National Association of Realtors says is about that 6 months. So for Denver, that would be about 20,000 homes. So at the beginning of 2020, this is pre-COVID still, we were at 6,000. So that was still a pretty significant seller's market, about just under half of the inventory we would need. So you can see that we are way below that, and hopefully that goes up, that starts to tick up as it gets a little bit warmer and stays light a little bit longer as we approach daylight savings weekend.
Yeah, it's funny, right? Again, to go back to the percentages, we look at if we were to go this year into 6,000 homes on the market, we're still probably very much in a seller's market, and the headline would read, active inventory rose 500%. Oh my gosh, the bubble's bursting. It's like, well, one, I guess it would depend on how fast that happened, right? If it happened tomorrow, I'd be a little bit more concerned, but it's, things happen gradually and then suddenly. So more inventory in the market's not going to be a bad thing.
No, I think everyone would benefit from that for sure. Okay, let's see here. And every month supply of inventory, again, we chatted about this. Something to look at too is if we look in the bottom corner, we break it down by county. So there's some areas that are more competitive than others. Arapahoe County had the tightest supply at under 0.2 months. So you can see this one's kind of nice to look at. Month over month trend shows you kind of where it's trending. Currently, is it going up and down? Most of the time, it doesn't bounce up and down that quickly. So are we gradually going up or are we gradually going down? But there's definitely markets that are more competitive than others. Something to consider if you have a little bit of flexibility on where you're buying, that you might be able to have a few more options or come in at a slightly lower price point.
Yeah. It's going to be very individual to that particular county, that particular street, that particular house, and every seller, every buyer is different. You're going to run into, each situation, right? It's going to be unique as to how you compete.
So days in MLS are days on the market. This is our speed of the market. So the average is 14 and a half days, which it's dropped 4.5 days from last month. I've been talking for the last year at least about the median. I think that paints a better picture of kind of what we're actually experiencing. So we dropped a day from 5 to 4 days on the market as a median days on market. So what this tells me is, as a seller, if I miss, pricing your home is incredibly important. And even in this market, you're not going to net the most money in most cases if you just throw a number against the wall. And you're like, well, if it doesn't work out, we'll just bring it down. Studies show, the numbers show that price it right the first time, you're going to get the highest and best offer in the first week of being in the market. So with this speed of the market, if you're a seller and for whatever reason you miss the price, you're off, the market rejects it, you need to make a quick and effective price correction, because otherwise your home is going to become stigmatized very, very quickly. And there might be nothing wrong with it except that you just got a little too aggressive or just missed the mark.
Yeah, it is. As Brenna's frozen, we'll see if she comes back as good as she did before. But the strategy around overpricing and then just coming down, it doesn't work. It hasn't worked for a very long time. Pricing it within the market, let that market drive it up. So
flip side of that, as a buyer, I see 4 days on the market, I need to make sure I have all my ducks in a row. Having that pre-qualification letter from your lender is crucial, kind of non-negotiable. If you go look at a home and you don't have that, you're going to miss out. So making sure you have everything set up so you can move as quickly as the market if you choose to do so. There's not time to go look at the home and then say, oh, I better call my lender, and oh, I better call my agent. Nope, it's gone. So just preparing yourself for what that speed is so you can put your running shoes on.
Yeah, without a doubt. I chatted with a potential client here this last week, and he found a home. He's looking to move to the Western Slope. He's looking to move to Grand Junction, and they found a home they really, really liked, and he called up his banker over the weekend, and they couldn't get the pre-approval in place for him to be able to submit, and he missed out on that opportunity. You can't wait. Sometimes it feels like you can't even wait for an updated lender letter to have the correct price even, right? So got to be able to move fast, have your ducks in a row so that when you find it, you can pull that trigger.
Yeah. And, there's a lot of buyers, unfortunately, that have learned that lesson by not being prepared. And that's really defeating and can be kind of heartbreaking. So the goal is, with this information that and if you're even thinking about it, calling your lender and getting a pre-approval, pre-qualification letter doesn't mean that you're buying a home. It just means you're prepared if you find something. So, take that step, get with your agent, get with your lender, so you can be prepared if the right home comes up, or if you're in that situation that you're wanting to move quickly.
Well, for some folks, it's been so long since they bought a home, right, that they had time to be able to get those things in place, and it was relatively easy to get their mortgage. Well, as we move forward in through the recession, it's become a lot harder to get a mortgage, and that pendulum is swung so far the other direction that what you think might be quick and easy really turns out not to be. So yeah, getting things lined up ahead of time is really in your favor.
Absolutely. So this graph shows us the actives and sold by price range. So it just breaks it down a little bit more. And it makes sense with our average price point across the board being in that mid sevens, that the biggest chunk, or not the biggest chunk, but the biggest category for homes being listed is in that 600,000 to 800,000. And also the most being sold. So we're also seeing virtually nothing below 300,000. That's just because of the appreciation. It's also because, in many cases, homes that fall into those lower price points, sometimes they're more of an investor deal, they're off market or things like that. So they're not going into the multiple listing service. It's just kind of a different strategy for buying and selling at that price point. Something we've talked about that could play a factor in where we're seeing the biggest number of active listings is if interest rates do go up and people's buying power shifts dramatically. It might be a strategy to pull down some of your list prices. So we may see a little bit of a bump where we see more in that 500,000 to 600,000 price point. So, right now the interest rates are not going up. So I would anticipate to kind of see this stay the same as far as where the most competition and where the most movement is. But that interest rate fluctuation could definitely play a part just in affordability and where we go.
Kind of funny. I remember as I got into the real estate industry that line with the bulk of our market was in that $200,000 to $400,000 range, and now we're at 6 to 8.
Yeah. Oops, I think I pushed one too many. Okay, I'm going to skip this one. Actually, I'll talk to this for a second. So month supply of inventory versus days on market. So this is supply versus speed. Something that's interesting to me is the speed of the luxury market. And so typically in the last several years, up to $1 million has been a seller's market, but then once you get to $1 million, it slows down considerably. Now, there's a few different factors to why that $1 million price range is still less than half a month. With our average sales price, Matt was just talking about when he got into the industry less than 10 years ago, our average price point was much lower. So $1 million was a lot further away. A lot less people were buying and selling in that range. So of course things were moving slower. So now our average price point is at 7.5, 730. That's a lot closer to $1 million. So there's a lot more people playing in that realm, which makes sense as to why it would be slower. But still, even at $2 to $3 million, we're still technically at a seller's market, and that's pretty incredible. We don't get more until we're over 3 million. So there's a lot of money coming into Colorado. There's a lot of equity that is in Colorado, just if people have been in their homes for a while. So this has been a shift we've seen since 2020 as far as speed of our luxury market.
Yeah, the money coming in for folks that had the income, had the assets to be able to do it, but maybe no longer wanted to live in those cold New England winters and come to Colorado and enjoy the weather we've got here versus being out there.
So this is our sold analysis. This shows us that we're pretty much right on track as far as if we look back again to 2020, February 2020, which was pre-COVID, we're not that far off from it. So we're at 3,600 in 2020. We're at 3,200 this year. So a little bit slower, but not anything crazy. So we would anticipate that this would continue to follow kind of that wave. And, we saw the pendings go up this month again, those under contracts. So we anticipate that this sold number will continue to go up. Even though we're down 14% year over year, things started off incredibly quickly in 2021. So we're seeing that this feels a lot more like 2019, even the beginning of 2020 a little bit more, which was still a great year in the market. It's just that the last 2 years have been so extreme that slowdown feels really slow. But we're starting to kick back up. Those homes are coming on the market, as we talked about, and we anticipate another strong selling season.
That's kind of what I'm predicting as well, based on the numbers as we've reviewed. Again, Brenna doesn't get into the prediction game. I do a little bit more. I can speculate, and Asterix fully believe that, or understand, my numbers could be off, my projections could be off. Happens every day.
So this is one of the graphs I was alluding to earlier, with that average price point being at $735 for detached single family. If we take a look over here on the left-hand side, you'll see that there are a few different counties that have opportunity with the average price point below that. So Adams County, 566, that's considerably different than 735. Arapahoe County, 670. Obviously, Broomfield, Douglas County, those are some of our more expensive counties. That's even exceeded that 735 into the 800s. But just knowing that we do talk about this a lot, but it's like, yes, these greater Metro Denver numbers are great, and they're a great picture of the overall trajectory of our market and what's going on. But then really looking as local as you can for your situation. So if I'm buying in Adams County, I don't care as much about Jefferson County and vice versa, or different. If I'm looking detached single family, attached single family, maybe I don't care as much about. So really trying to pinpoint and hone in as specifically as you can, so you understand the market that you're moving into, and know that there are differences. And I'll show you on the next slide, attached single family, especially in Denver, that's a way different story than we're seeing in the rest of the market. So that's just, that little subcategory is kind of singing its own song. So understanding the different parts of the county, or different parts of Denver Metro are going to be a little different, can really set you up for those proper expectations.
Yeah, and understanding this, that this is the Greater Denver Metro report, and real estate is uniquely hyper local. In understanding that's one of the big reasons why a company like Zillow, who's in the information selling business, they're not in the real estate business, as they got into owning and trying to flip properties, really got into trouble because they could not understand this local value level for buying and selling real estate.
Yes, absolutely. The other thing I'll point out is I know with the market being as intense as it has been for the last couple of years, you have a lot of people concerned with buying at the top of the market. And what if things go down? And what if? So you'll see that we have this trajectory, this upward trajectory that's been steeper than it has been even in the past. But we have these seasonal peaks and valleys. So even if you bought in June of 2020, the next year, that peak, one calendar year later, you're still outpacing where you were. Now, this year, it's happened a little bit sooner. So even if you bought in June or July of 2021, which we all thought was an insane market, and oh my gosh, how can it go any higher? In February, we're already surpassing it. So if you bought a home and you had to put more money to the table than you thought, or you had to cover an appraisal gap, consider that an investment in your equity that you're already regaining. So that's just a different way to look at it when you are having to go above asking price or potentially put more money towards than you were anticipating. It's a loan on your equity, and we are in double-digit appreciation. In the last 2 months, we've had 6-figure appreciation. So the return on your investment is happening very quickly in most cases. So it can still be scary. It's still the largest financial decision people are making for the most part, but it's a pretty darn good return on your investment in the majority of cases.
Yeah, I think if we had the vision for it and said, "Hey, I've got this hot stock tip. Now you're going to buy it at, let's say $50 today, but over the course of the next couple of years, it may drop down to $30, $20. But in 5 years or 10 years, it's going to be worth, $625. Would you make that investment?" And people would say, "Yes, absolutely. I'll make that investment. I'm going to put a bunch of money into that." Well, the real estate market can kind of do the same thing as we look at what is it going to cost me today, and 10, 15, 20, 30 plus years from now, is it going to be worth more than I paid for it? I think history would show yes. The answer is probably yes. I don't know if we go back at any point in history to find 30 years from one point that real estate was less expensive at that point than 30 years in the past.
And, we are at an 18% year over year change. Is that speed of appreciation sustainable? Probably not. But even at the national average of 4%, that's still an appreciation on your home. You're still moving in the right direction. So even if it doesn't become, it's not a 14er, it's more of a foothill, you're still in a good spot. So I don't anticipate that the market's going to continue to skyrocket for the next 30 years. But even if it levels out and have some peaks and valleys, more times than not, you're still going to end up on top.
Yeah, if it continues to skyrocket, I think it's going to have to be paired with skyrocketing wages and income there. That's going to be the balance that we've got to watch. How long are we going to see this appreciation outpacing, income level increases?
So this is what I wanted to show you as far as Denver goes. So Denver attached single family, it's still one of the more expensive attached single family markets, but we're actually down a little bit month over month. And we are up year over year, but at a much smaller percentage than the rest of the major metro counties. So there's just more inventory there. Things are moving slower. The attached Denver market was, and when I say Denver County specifically, that market was the slowest to come back after COVID. With the flight to the suburbs, people were a little hesitant to move back to the city. Businesses were not opening as quickly and all of that. And now we have a growing homelessness and drug problem, especially right around Union Station, which is definitely playing a part in people's comfortability with being downtown. So there's still, great options there. We're still seeing a strong market, but when you look at it comparatively, it's different than if you were buying a attached home in Jefferson County or Arapahoe County, where those are pretty strong markets.
Yeah. Again, that hyper local market and those subsections within our Denver metro real estate market really impact that level of what's going to happen. What's the outcome of this particular deal?
Well, and if you hear of your friend that sold their townhouse in Jefferson County and they were this aggressive and they got this many offers, and you take that same strategy with your downtown Denver condo, you might miss the mark. So that's where it's important. You might have a great property that's very sellable and you just were looking at the wrong data.
Exactly.
So this stat actually surprised me this month. Percent sold to list price. So what it was listed for, and then how much of that list price was it sold for. So we peaked out just under 106% in the summer of last year, and we're at 105.2%. So I anticipated that it was going to go up to that same level as last year, if not exceed it. I did not anticipate the jump from January to February as quickly. So I have to admit, my jaw I was like, oh, okay, here we are. So this just speaks to the competitiveness of the market, active inventory being low, people still needing to buy homes. Obviously, this makes sense. It just shows you how competitive the market is. So on the buy side, if I'm taking a look at this, I just need to mentally prepare that in most cases, if the home is in good condition and it's the first weekend on the market, me going in at list price probably isn't going to get the job done. That's not across the board. There's definitely different scenarios where you can get it for list price, but just kind of having that in my head, okay, I need to be prepared for 5% above. Or if you're in different, look at the different price bracket that you're in and see where things are at, and just mentally prepare for that. So you don't have that shock or that frustration when you go in. And if you get to pay list price, then that's amazing and high five, and that's even better. But just a little bit of that mental prep, I think, can really help the whole process.
And to tag on that, we're talking about an average, right? So there's those that are above, there's those that are below. If it's new to the market, it's the first weekend, it's probably going to take over 105% in order to be the winning bid. Winning bid, congratulations, you paid the most amount of money for that, right? Nobody else is willing to pay that. That's how you win. But all of those that are getting sold at list price or below is what brings that average down. So again, if it's brand new to the market, it's nice. Anticipate it's going to cost more than 105.2%.
And on the flip side of that, if you're looking for a home and you're not in a position or you just don't want to compete, then look for those homes. And there's not a lot of homes anywhere, but look for those homes maybe where they did miss the mark a little bit and it's been on the market over the weekend, on that Tuesday, Wednesday, Thursday of the next week, or if it's been sitting even longer than that. We did have some of those iBuyers that came in and kind of missed the mark a little bit on pricing. And so their homes were sitting on the market longer. Well, there's some potential opportunity there, especially as they are trying to offload some of those properties that they are still holding on to. So you might have to dig a little bit. There might be less, but there are options to be had if you don't want to compete at this level. But just knowing kind of across the board, in most cases, this is what you're looking at.
I'm actually now building my search criteria based on homes that are not brand new to the market. So when my client gets the email, it's not the brand new home that just hit the market when they want to strategically compete, and they're not looking to just throw the kitchen sink at it, actually building the search criteria. So the homes they get in front of them, hey, if you want to pay list price, you want to pay under list price, these are the homes we've got to take a look at. Not the brand new home to the market that's a shiny penny everybody's after. This is the other home.
And to your point with that, as well as search criteria, knowing that the that list to sold price is above 100%. If you're approved for up to 500, please do not set your search criteria to $500,000 because that's just going to frustrate you. So adjusting some of those search criterias to fit in with what you're going to have to compete with and what you feel comfortable paying. So you're not looking at something that right off the bat, you're really not eligible for. That's a huge pain point that you can avoid by just adjusting your search criteria.
Yeah, because if the homes you like are at 500 and that's where you're approved for, but they're selling for 550, it's going to be harder to swallow trying to walk into the home at 450 because that one lands in your price point of what you can actually afford. Shop strategically with what it's going to take.
Yeah.
So cool. It's the market is nothing but interesting, right? It's consistently a similar conversation to what we've had over the last, as you and I have been doing this now, 2 full years.
Mm-hmm.
We're going on our 3rd year here. We're doing this monthly. So the overall theme hasn't changed, but gosh, the tension in our market sure has changed.
Yeah. Be kind. Be kind to people because, sellers, it's tough. And buyers, it's tough. And agents are working hard. Lenders are working hard. So just be kind to everyone.
I truly believe that this is further proof as to why you really need to hire a professional, a true professional that is great at what they do, because there's so many different strategic ways to compete, to put the best foot forward. I look at a lot of contracts from real estate agents, mostly because I do a lot of listings, right? So when I get those offers, those multiple offers, I'm reviewing and I'm looking at it. There's a lot of really great, fantastic buyers out there that their agent just didn't help them put their best foot forward. They didn't put them in a position to win. Now, that being said, there's a lot of fantastic agents out there. There's a number of them out there that unfortunately still aren't winning every time, right? But being able to work with a real professional, somebody that's going to strategically put you in a position to win, is so much more important than ever. On the buy side. On the listing side, it's really taking a skilled real estate agent to be able to decipher the best from, we'll just call it the crap, right? It's not always the highest price that's the best deal. It's the deal as a whole, and how do we get there, and how do we put ourselves in a position to really negotiate that from the very beginning and not just when the offers come in. So I went through that, and I think Brenna's froze again. Something there with her Wi-Fi. So as we look into the spring selling season, I think we're going to be busier here starting this month and moving forward. I think inventory levels are going to climb. There's still going to be more buyers out there. It's still going to be very competitive. So I think that's the market that we're into. So unless Brenna unfreezes here in the next couple of moments, won't get a chance for her to say goodbye, but I do so appreciate everybody at Land Title that puts the data together and Brenna for bringing this and interpreting the data for us as we take a look at it. So on her behalf, we'll see you guys next month, and thank you again so much. All right, guys, take care.